Welcome back to our channel, Learn and Trade Forex, where we explore various trading strategies and techniques to help improve on your trading skills in the Forex market. In today's video, we're going to discuss a powerful approach to fine-tuning entry strategies by combining signals from the daily time frame with entries on the 1 hour time frame. In this video, we're going to explore two entry methods. The first method is going to be a breakout strategy, and for those we're going to use stop orders. The second method is going to be a pullback strategy. For these types of entries, we're going to use limit orders back into levels of support or resistance. So let's go ahead and get started, and let me show you guys what I'm talking about. Now, when it comes to a fine-tuned entry strategy, it's crucial to begin with a clear directional bias. One effective way to establish this bias is by analyzing the daily time frame. The daily charts provide a broader perspective of the market, and it helps to identify key levels of support and resistance, trends, as well as chart patterns. Alright, now to enter a trade on the breakout, we must place a stop order slightly above or below the breakout level. This will ensure that if the price continues to move in the direction of the breakout, we will be entering the trade automatically. This approach allows us to capture the momentum and participate in the potential continuation of the trend. It's important to set a stop loss to manage risks, just in case the breakout fails and the price. So let me show you guys what the breakout entry order looks like. I'm going to do it for a potential sell order as well as a buy order. We'll start with the buy order. So we're on a daily chart. We recognize a signal here to go long. Why is this a signal to go long? Because we came all the way down. We're bouncing off a level of support. Our momentum oscillator has just turned over, showing us the momentum to the downside is changing. So we have a potential reversal also with this nice big bullish candle right here, right? So this is a potential setup. So here's the signal to go long, right? So this is the day after this candle closes, we have a signal to go long. So this is the day that gave us the signal. So this is our trading day here. And this is how we would set potential breakout order to go long. Now, let me just change the color of this line so we can differentiate once we go down to the 1 hour time frame. So let's make the color of this line, let's make it red. All right, so this is the day that gave us the signal here. So our breakout entry will be right above this candle right here, because we want price to push us into the move. We want price to continue that we're on the right side of the new developing trend and push us into the move, while also setting a potential stop loss here. Now, I don't say we set the stop loss here, because once we go down to the 1 hour time frame, we're going to be able to fine tune this position. Okay, so again, this is the day that gave us the signal. This day has closed, so there's nothing we can do with this candle. We can't make money off this candle. So this is the day that we're actually trading right here, right? So let's go down to the 1 hour. Now let's find where we are on the 1 hour time. Okay, here's our play right here. Here is our trade right here. So again, here is the day that gave us the signal to go long. It's going down. Trend was down, came up, created a higher high. This is our signal that price potentially wants to reverse, but we're going to go long. So our stop loss is always going to be behind the swing low of the move that we're trading, the swing low. And this is our potential breakout entry right here. But we want to break out. We want to take the trade once price trades above the close of this day. So we can put our entry order right here, our buy stop order right here, above these candles here, right? And then, like I said, we want price to bring us this is the day we're actually trading here, right? From line to line represents 1 day. So what we want price to actually trigger us into this trade. And we got triggered right here. Once price broke this level, we got triggered into the trade. We had a slight drawdown, but we were so confident in the price continuing in the direction of the trend, price ran right till our take profit. And if we go for a 1-to-1, that's about 157 pips. So that's your 1-to-1 there, or you can try and get a 2-to-1, but you know, after we get half the position, we go to break even or something like that, whatever your take profit strategy is. But that's how we do a breakout strategy on a buy. Now let's look at a breakout strategy on a sell position. Alrighty guys, so let's look at a breakout strategy on a sell position. Okay, so I'm going to go back to the daily time frame. Alright, so let me get rid of this. Well, I can leave that there. Okay, so here we go. So here would be the signal. The signal would come after this close of this candle right here for a shift in momentum. This is giving us momentum is moving to the downside. So we want to look for a sell position. Okay, so this is our signal candle here. So again, we would go in, we would place a potential stop loss here, and we want to set the entry of the trade at the break of this candle. So the entry would be here. Okay, this is our signal candle, so this is our trading day. So let's go down to the 1 hour. Let's find it. There it is right there. Okay, so as you can see, this is our potential stop loss. This is the potential entry right here. With this trade right here, like again guys, this is a swing trading strategy. So sometimes it takes, a few days to a few weeks for the trade to play out. Hell, sometimes it even takes a day or a week or so for the entry or the trade to even execute the order, right? So this is the day that gave us the signal. This is the day that we actually start trading this potential trade on, right? So this is when price breaks this level right here, we want to put us into the trade. Here's a stop. So it took 1, 2, 3 days, almost 3 days for the price to even execute, right? So it put us into the trade and it fumbled around 1, 2, 3, 4, 5, 6, 7, 8, 9 days. So remember, this is a swing trading strategy. 9 days is almost 2 weeks in the Forex market, right? But when price broke, it broke down in our direction, went straight to the 1-to-1 take profit that we like to take. Okay, so again, this is how you do a entry breakout order, using a stop loss order to get into this trade. Okay, this is a more conservative style of trading. Alrighty guys, Forex King will be back with the next video.